Hello everyone, this is group number 2 from University of Potra, Malaysia, School of Business and Economics. Today's topic will be about the political instability that occurred in February 2020 caused uncertainty over the Malaysian exchange rate. Our group members, Sarior Munawar, Abdul Latif Hisham, Al Mahashhash Majda, Hassan Musa. The exchange rate of a currency is sensitive and much affected by the future forecast of the country's economic growth or the country political situation. However, in most cases, the exchange rate can get high or low depending on forecast prediction and the current economic and political situation, stability, and power. In February 2020, Malaysia encountered a change in the political system, which caused instability of the current exchange rate against the US dollar, which is the most common situation in most of the world countries, as any change will cause a delay in the economy, and the new political might influence the country policies and the new government political trends toward the world. However, in our case, the situation was already getting huge impact because of the COVID-19 pandemic, which pushed all the world countries to the limits as the outbreak had impact on trade and tourism, add up the political change which affected the investor confidence. Malaysia lowered its growth forecast in 2020 to 3.5%, down from 4.5%, making it the lowest growth rate since the global financial crisis in 2009. The government has reportedly been preparing a stimulus package to mitigate the impact of the virus. However, the change of the political situation impacted this economics plan, not to mention extra budgetary stimulus, which put the most burden on the central bank to cut interest rate to support the growth as there is room for relief due to continued low inflation.
Political disturbance has also triggered pressure on Malaysia assets, including the Malaysia ringgit, weakening the exchange rate to above 4.20 against the US dollar, the level expected to be at the end of the first quarter of 2020. Political uncertainty could result in a lower value. The ringgit is valued at 4.50 over the course of the year, a level last seen 3 years ago. The rise of the dollar's exchange rate against the Malaysian currency did not bring anything new in light of the escalation of a global economic crisis under the influence of the spread of the coronavirus, COVID-19. But what is striking is that the recent rise crossed the threshold of 4.20 ringgit. The Malaysia exchange rate has been relatively stable in recent years. As of 2019, closed an exchange rate of 4 ringgit, but it rose by 1.05 this year. Malaysian official data shows a strong correlation between the current decline in the exchange rate and the country's exposure to the spread of the coronavirus due to the Malaysian economy's structural nature, which is hungry for foreign currency. In addition to the noticeable decline in imports due to the sharp decline in international trade and disruption of most supply chains as a result of market closures, which led to difficulties in importing raw material for manufacturing, which added to the export problems. The suspension of transport, freight, and air traffic between Malaysia and the world threatens to reduce exports and reduce foreign currencies flow, which is essential to the Malaysia economy.
Likewise to the decline in foreign trade has weakened the central banks. Treasury receipts of the dollar, which led to an increase in demand. For it, an increased pressure on the dollar, which fell sharply again. The decline in tourism on which Malaysia relies a lot as a supplier of foreign currencies to move the economy. The protocols and restriction on the movement has increased pressure on the local currency. According of the statistic.com database, tourism revenue movement amount to about 86.1 billion ringgit, representing nearly 21.2 billion dollar, which is difficult to compete even when the movement and traveling resume. Again, due movement controls and seeing restriction and ability of tourists to tourism travel activities. And the foreign currency in Malaysia is closely related the Malaysia corporate debt, which due by nearly a third of in 2020, which make them need a proved hard currency, which increase the demand for honest the Malaysia ringgit. The rise of the dollar value in general represent the other side of the reasons for the rise of its exchange rate against the Malaysia ringgit, because the dollar has risen against most countries currencies. Since the beginning of the corona crisis and its reaction. This is also due the reason related to investor during crisis and widespread to be store and keep the dollar as reverse for future. It is first global currency.
The people's confidence in the US dollar as a reliable store of value that people use to save and preserve it. It is the value in any crisis. Increasing demand for against all currencies, including the Malaysian ringgit. The decrease in demand for Malaysian export, especially oil products and natural gas, covering nearly quarter of the total export, and the drop in oil price has affected the foreign currency flow. The ringgit closely linked to the Brent crude oil and largely reflect fluctuation in oil prices. This decrease had a moderate effect compared to the severe impact of the current epidemic crisis. In conclusion, the instability of the Malaysian ringgit in February 2020 was caused by the political situation or the COVID-19 epidemic. The government must take action to avoid the collapse of the Malaysian ringgit. That can be achieved by supporting the emerging stock in the stock market or supporting companies affected by the COVID-19 virus, as well as supporting investors with loans to cope with the current closure crisis. On the other hand, the government must support the tourism sector and adopt a new project to attract tourists to Malaysia, which will allow the flow of foreign currency. Meanwhile, we must not forget the education sector, which attracts many international students to complete their studies in Malaysia. In addition to domestic market support and encourage the producers to increase their production to increase the country's export. That's for all. Thank you for listening.